Hi and welcome to the FinancialFox. Today I'm here with Clem, CEO of ADVFN, an online blockchain, and the most read, the highly regarded crypto expert. How are you, Clem?
I'm very good. I'm even better now you've said that.
Well, that's the truth, isn't it? You started to talk about cryptocurrency when nobody on the London Stock Exchange would believe that, then was going to actually happen.
Well, I do a lot of writing on crypto, and I have a column in Forbes, on Forbes Online, which is quite well read. Every now and again, something like 1 million people will read one of my articles, which is nice. So I'm happy to be called highly respected.
And you wrote a book, what that was, 3 years ago.
How to trade cryptocurrencies. I can't exactly remember the title now. It's 2 or 3 years ago. But it was actually #1 for a bit in the crypto space on Amazon. And that was nice. But it's really kind of a practical guide to how, if you want to trade crypto, where to start. Because crypto has an incredibly steep learning curve. I mean, it's a painfully steep learning curve. And most people just go, I'll give up. A wallet? What's a wallet? A hash? One of my co-directors almost got arrested for talking about hash on his mobile phone on crypto at Bank Station. The policeman pulled him one side and said, you're talking about hash in the deal. What is that all about, sir? And it's sort of like, hash, Bitcoin. What is a Bitcoin, sir?
It's blockchain.
he had no clue. He thought he was doing a drug deal on Bank Station. But, the level of knowledge you have to have is quite a lot. I mean, people think stocks are quite difficult to get into, but crypto is probably 2 or 3 times more difficult, or the learning curve is 2 or 3 times steeper. So I thought, right, well, I'll write a book on where to start, where to go, what to do, what it's all about, and how to get where you want to get in basically the quickest possible time. So you don't have to kind of go all over the place to find little snippets of information and find out, what it's all about. You could be all there in one book that you could read over a couple of days, and you'd have everything you needed to know. And a couple of years ago, that was, very well received. I think a lot more people have got the idea now, and it's a lot less obscure, a lot less of a niche, and it's moving into the mainstream. Now, the interesting thing is that the mainstream for this is amongst the so-called and much maligned millennials. Our user base for this are the 20-somethings. And I often think sometimes it's, young teens, but it's the 20-somethings that are really into crypto.
What I was reading was the one, like the picture of the typical Bitcoin trader is actually a wealthy, techie, foodie millennials, so new millennials.
Well, exactly that. That's our experience. And obviously on ADVFN, we see what the audience is like, and it's the new audience. And in OBC, our products, I was actually told off by the developers because I said, this is all kids using this site. And they said, they're not kids, they're sort of, 20 to 35. To me, that's almost a kid, but they're not strictly kids, but it's a very young audience. Now, back in the day, and I come from back in the day, during the dot-com crash, we had an old broker, and he said, now we've had a crash, that the audience, the investors won't be back for a generation, which was a bad thing to hear in 2000. That means they're not coming back to 2025. And actually, he wasn't far off. The new audience came back a couple of years ago, almost a generation. But that new audience isn't in equities, it's in crypto. So that new generation that came back to investing and to trading has come back, and they haven't come back to shares. They've come to crypto.
So you don't see within ADVFN like a change in kind of the investor profile?
Well, we do, because we're now getting crypto people, and that investor is it's a different instrument. Yeah. So whereas they would have been equities, they're now, the young people are predominantly crypto people. So it's the same sort of person, but they're not looking to shares. They're looking to Bitcoin and Litecoin and BCH and Monero, etc.
Talking a little bit about shares, there's been lots going on with tech shares, which have been doing quite well actually recently.
No, exceptionally well in America.
So do you think that tech is actually the best place to invest at the moment?
No. The American market is incredibly strong. And the reason for that strength is the Federal Reserve and QE4. Yeah. Now, after the credit crunch, the Federal Reserve pumped money into the economy. But they did that through what's called QE. And QE means that all that money that gets injected in only two things: houses and stocks, and assets that are like stocks. Yeah? Because what happens is the Fed goes, how would you like to borrow money off me for nothing, big institution? A big institution goes, I'd like that. But I will have to pay it back, won't I? And I will have to pay a little interest. Yeah. So, I don't want to lend it to business because I won't be able to get it back quickly.
Yeah.
Where am I going to put this free money to get some interest? And they need carry trades. Now, the best carry trade for this is equities. So they take it, or the people that take it from them, put it straight into equities. Bang. So equities go up. They can only ever go up once you're printing more money that way. Now, what happened was they decided after N years of doing that, they were going to do the opposite, QT, and that was the Christmas before last, just before, and the market nearly crashed because they were reverse QEing. They were taking money out of the system, and of course it was coming out of stocks and out of houses, and a whole pack of cars nearly came down in January or in December of 2000, and I'll get the right year, 17. So they went, oh, blow me, oh, we better stop doing that. So they said, we're going to stop QE now in a few months' time. So that stabilised the market. And then they had the repro crisis a few weeks ago, well, just before Christmas, when the market nearly froze up. And they started not QE, QE4. Well, that money's gone straight into the market. It's gone straight into equities again. Yeah. Boom, up it goes. So what's driving that is not cool, groovy tech companies. It's not, marvellous trade. It's this money supply getting forced into house prices, which are on a run in America, and into equities, which are in a run in America. And that QE goes on at least to, I think it's either March, April or May. It ends. But then how are they going to stop doing it? So they're going to keep doing this QE, or at least holding it still, and that's just going to be pushed into the equity markets. Because you're the Fed. You lent me, I don't know, as much money as I want, 10 billion. Well, I stick it at 1%. I stick it into a stock at 4%. I'm making 3%. So I spend 1% on hedging that position. I'm making 2%. Free money, right? And until they ask me for the money back, which until they go to QT, they won't. I can sit there making 2% on 10 billion till hell freezes over.
So that's really interesting. So what are the places where would you invest money today, now?
Well, the question...
Or you are?
Yeah, well, I can tell you where I am, and I can tell you why. Because it's more important to have the reason why. So in this QE situation, you're having very low interest rates. Yeah, so anybody with any money to invest, they have to put it in a carry trade of some sort, because they can't get it in the bank. So they go and they put it in dividend stocks. Now, anything that pays a dividend got smashed by QT. Right? So when you saw that collapse in share prices that were of value stocks or dividend paying stocks, of Woodford kind of stocks, that was QT did that. QT is what broke the back of Woodford, because all those contrarian high dividend paying blue chip stocks that he would be most of his portfolio, they got hammered because everyone pulled the money out of those sort of carry trades. So they were all carry trades, those dividend-paying stocks, income stocks, right? And therefore, when the QT came along, everyone had to pull their money out of that. So those dividend-paying stocks collapsed. Their yields went through the roof. And if you look at the indexes for the dividend payers in the FTSE, against the FTSE over 3 years, you see the dividend payers go, because of QT, right? So now QT has stopped. They're going up faster than the FTSE. So you want to be in dividend-paying carry trade stocks, because if you do QE in Europe or you do QE in America or wherever you do it, you don't necessarily put all your money locally, which you put lots of it. You go to the UK and you put it in UK dividend stocks and you hedge the currency. So you can do that anywhere in the world. So in this new environment of QE, a proto-QE, it's going to be strong for those stocks that were hit by QT. So that's where to put your money. But it gets better, because the new Prime Minister is going to go hell for leather in the UK. He's going to have to with Brexit. So they're going to take the GDP deficit of 1.5%, and they're going to bump it up to 4.5%, like the Americans' fiscal deficit, like the Chinese fiscal deficit, like the Japanese fiscal deficit. That's 60 to 70 billion pounds a year that's probably going to come flooding into the UK economy, right? And that's just going to go into stocks, yeah, because it's going to be low interest rate, free money, and people are going to be chasing carry trades, right? And then there's more money in the back pocket because the previous administration got the deficit down to 1.5% in the first place, so there's probably a bag of money there. So in the UK, they're going to go hell for leather, there's going to be a boom, and therefore it's all going to go up anyway.
So you think the market is going to pick up? Because it's been quite depressing so far.
Well, not if you were in these sort of stocks before Christmas, you just made a fortune.
Do you have any stocks or sectors that
I've got a packet of them. There's no shortage of them. They're everywhere. The UK market is so cheap. It's painful. It's absolutely painful. The stock's paying 6, 7, 8% dividends. 8% dividend.
Yeah.
I mean, it's madness. When you put your money in the bank and get 1, and people, are going, maybe you have to pay reverse, a negative interest rate on your money.
Do you want to give a couple of tips for our investors?
I mean, I don't have to name stocks because they are, you just have to say, go to the FTSE 100, list them by dividend yield, and look at those dividend yields. You go, what? I'm getting 7% on Shell, I'm getting 5% on ITV, I'm getting blah, blah, blah percent here and blah, blah percent there. The yields are mind-blowing. Yeah, go to America, they are about a third of the sort of levels that you're getting in the UK. The whole FTSE 100 pays I haven't seen, look at it recently, but it was like a 4.5% dividend. So if you bought the lot, dividend payers and low dividend payers and high dividend payers, you'll get 4.5%. If you buy the tracker, you'll get 4.5%. If you buy the dividend paying tracker, you'll get 5%.
But we always say about diversified portfolio, on that point, just come to my mind, obviously, to look at some safe haven assets, which was called, for example, Bitcoin or gold. Considering the price of Bitcoin, where do you see the price going? Do you think it's clever or is it good to buy now?
Well, I think that Bitcoin has a massive future. Now, if you try to time that sort of thing, you're going to get yourself in a pickle, right? Because it will go up and you'll go, oh, it's gone up now. Oh, well, I'll give you a good example. So Bitcoin Cash and Bitcoin SV went absolutely mad a couple of weeks ago, or maybe even a week ago. So my Bitcoin Cash went berserk. So I sold it and switched it into Bitcoin because I like Bitcoin. And, it's a bit crazy it went up. And I don't want to get it turned into fiat, but I want it in crypto. So I thought, oh, that's a bit too much. I'll sell that and put it into Bitcoin. I love Bitcoin anyway. Blooming thing carried on going up. So if I just left it, I would have made more money. Not that I didn't make money out of Bitcoin, but you see, if you mess around, half the time you'll be right and half the time you'll be wrong. Unless you have a really, really, really strong reason that you know is right, you're going to be right half the time, wrong half the time. You could be no better off. And with Bitcoin, if I went, right, oh, well, Bitcoin's going to drop $2,000 in the next 6 weeks, I'm going to sell. I'd sell and I'd be wrong half the time and it'll go up.
But what about with the halving coming up in May? Do you think that will bring?
I think it's going to be great, yeah. But the way to do it with these sort of things is, I love the phrase hodl because it's a great phrase. It sums up the lightheartedness of crypto and the newness of it and the youth of the whole thing. But it's buy and hold in equities. And in buy and hold, one of the key things of buy and hold is dollar cost averaging. Now, that sounds really boring, but what it means is you don't get carried away, you just buy a little bit. And you come back in a couple of weeks, you buy a little bit. And you come back in a couple of weeks, and you buy a little bit. You come back in a couple of weeks, just before you buy, it goes up a load, so you buy a little bit. And a couple of weeks later, you're just about to buy, it goes down a lot, and you buy. It doesn't matter, it averages out all that roller coaster.
Because you think that the long-term game of Bitcoin is going to be...
long-term's massive, yeah.
So buy a little bit of Bitcoin, invest in domestic UK dividend stocks.
I think it goes like this. Now, this coronavirus is quite important because the future is brilliant, apart from if one of the 4 horsemen of the apocalypse shows up, when 25% of your population drops dead. And if over the next few weeks, and we're discussing this in January 2020, in the next couple of weeks, it'll be clear whether this is a terrible menace or whether it's going to be something that's going to be sorted out, like SARS was sorted out, like MERS was sorted out, like Ebola was controlled. And that's highly likely. It's very, very, very likely that it will be sorted out and controlled, and it won't be so bad, because the people behind that sort of stuff have controlled SARS and have controlled Ebola and have controlled MERS and have got better at it since, and they're on it. So that is fantastic, and the fact that they controlled those terrible things is incredible news that should have been headlines for weeks. But good news is never reported, so it's probably going to be fine. But if it isn't, all bets are off. Yeah, so that's the only dark cloud. It's a very, 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 very nasty cloud, but it's probably quite small. So the chances are it's going to be fine. But in the next 2 or 3 weeks, we've really got to watch out for that to make sure that this isn't the zombie apocalypse coming up, because those viruses, when they're nasty, they kill 25 to 35% of everyone that catches them. And I know how many colds I've got in the last 5 years. So, it's a very serious risk.
Particularly with entrepreneurs and CEOs traveling all over the world all
it will just crush the economy, period. It'll make the global financial crisis look like a walk.
So how that will influence the investment?
Well, if it's a thing, we'll know in 2 weeks, and it will hit the fan. And it will be, a terrible, terrible, terrible event.
To wrap it up, I had one...
And you were saying, weren't you, that those face masks are sold out in the local...
Yeah, exactly. I was trying to find them. Actually, my mum, she phoned me panicking, say, "Oh, Steph, you need to get a mask when you go in the tube." So I said, try to find one. It was a nightmare.
In a couple of weeks, we'll know. And it's a high probability that it's not going to be a disaster, okay? Because I'm pretty confident. But any investor should keep an eye out on that, because nobody. Plague is worse than even war.
Yeah, I think everybody needs to know what is going on in the world.
You need to keep an eye on that as an investor. That's a very, very important thing. But with a bit of luck, that's not going to be a thing. The prospects for 2020 are massive. It's going to be huge in the UK. And you don't have to be a stock picker, just buy the FTSE 100. And if you like a bigger dividend, you get 4.5% from the FTSE 100. You get 5.5% from the FTSE 100 dividend tracker. Job done. If you're worried about, war in the Middle East and all that kind of stuff, Chinese trade wars or whatever, if you want a safe haven asset, then you can either pick gold, which is awkward, or you can pick Bitcoin, which is less awkward, but still a little bit awkward.
Yeah, and talking about that, today I had an interesting question from one investor, because I pointed out that Bank of England is actually looking, among other banks, to implement digital currency.
Well,
and he asked when this is going to happen.
Let me stop you right there. When I hear things like that, I despair. The pound is a digital currency. Right? Yes, they do print it out on plastic occasionally, and they do make little metal discs with it on. But 95% of all pounds are held on a hard disk that spins. So the pound is a digital currency. All currencies are digital currencies. Yeah. Now, they are not going to make a cryptocurrency. That's a different thing altogether.
Yeah. But do you think they are going to make their own cryptocurrency for their own local country? I mean, like you did with OBC for.
No, I don't think they will make a cryptocurrency in the format of Bitcoin or Ethereum. And one of the reasons for that is that the whole banking system relies on deposits that are then levered up multiple times. Now, if you can just make your money vanish into a piece of cryptography, nobody can rehypothecate that. Yeah, because if the history of banking goes back way times, and people who espouse gold seem to forget that the way money used to work is I put a pound of gold with the goldsmith, and the goldsmith then writes slips of paper saying I owe you gold, right? And if he's got 10 pounds of gold in his basement, he's got 100 pounds worth of IOUs out there. And when they come to get their gold and there's not enough, they go bust. That is how banking has always worked, right? And that whole system relies on the gold bars in the basement. And if people's money isn't going into the bank, but is going into a magic nowhere land, that whole fractional reserve banking system falls to pieces. Yeah. And they can't afford that to fall to pieces. It can afford it to transition over a long period of time, but they can't afford to say, oh, we're going to have the UK GB Bitcoin, and all the money comes out the bank into some server somewhere, and there's no reserve banking system. The banking system just goes boom.
But we already saw what is happening with the Facebook, that now the Libra cryptocurrency, that now even Vodafone give up. So they are left with, they are going to try their own project if they are going to. Do you think they are going to go ahead?
Well, I mean, I think Facebook went about it all the wrong way. But you have to realise that Facebook is a country with 3 billion people in it, right? And America has a user base of 350 million people. Yeah, a country is rather like a website. And if you thought of Facebook as a country, it's the biggest country in the world. So if they start having their own money, what happens to the governments? Excuse me, we're the government here. Are you? Oh, why? Well, we got an army. It's like...
It's tech superpower, though, and then it comes with lots of problem regarding data security as well, which is something that I think the new generation is actually carrying, where the millennials or the older generation, they were willing to share any kind of data because it was a new things. But the new generation is putting this as one of the top priorities, so it makes a little bit thinking if really these tech superpower are going to be able to run the world.
Well, I think you picked a good word. If a superpower that is technologically based and not geographically based has its own currency, is one step further towards sovereignty. And if you've got a website with 3.5 billion people and all of a sudden they start inching towards sovereignty, the old guys have got a problem. And that's why they don't like Libra. Yeah, and I think that is the situation now. On data, I think that people don't really have a problem with data. The technological companies have a problem with data because they're totally unethical about the way that they use it. And they have absolutely run riot and do the most miserably wrong things with it. I mean, if I go around the internet, all this stuff starts following me about. If I start talking about cat food now, by the way, guys, cat food, cat food, cat food, cat food, cat food, you're not going to get adverts for cat food.
Yeah.
Because you heard this, you're going to suddenly pick up your mobile phone and there'll be cat food adverts on it. And you say, what happened there? Well, I said cat food, cat food, cat food, cat food. Your mobile phone heard it and is now giving you cat food adverts.
But even if you go to check out some some shoes in a shop, and then the next day, this is what actually happened to me, on ADVFN, I got an advert of the same pair of shoes.
Yeah,
and say, how weird
it's not right. And what's worse is that the people supplying that advert will actually mark you as being an ADVFN user, nothing to do with us. Absolutely nothing to do with us. We wish they wouldn't do that.
So the profile is shopping, ADVFN user,
yeah,
woman.
Absolutely. And it's nothing to do with us, right? And they don't ask permission from us. And then they retarget you, and they don't even pay us for it. So they don't pay us for it, and then they stalk you. And that is so wrong. It's bad enough they don't pay us. At least I could say, oh, well, maybe they've got a point there. But they steal your data, they steal our inventory, and they steal probably the advertisers' money. It's absolutely outrageous. It's just wrong.
So how that can be fixed? What would be the solution?
Well, it's a good question, isn't it? I think that the governments are starting to move on it because they realise that democracy is at risk here. You know, the reason that certain people have won elections all around the world is because these people have targeted adverts. So if they think that I can say, they're going to ban face masks, and Joe Bloggs, who is the XYZ party, is going to ban face masks because I know that you're a big face mask buyer, right? So you vote against him.
Yeah, exactly.
They fixed the election, and that's been going on. That's been going on all over the world, including Europe and America, and that threatens democracy because they can end up electing who they want by targeting advert and profiling you. Because frankly, they know more about you than you do. And they know more about me than I do.
But this is not something that the government, in a way, likes it because they can monitor, their population.
Well, they don't necessarily, although they probably do, have good access to that data. And also, they probably don't have the people to use it. The point being is if I run this big data company and I want to get... It used to be the same with newspapers, right? If you didn't kiss the ring of these big newspaper barons, you wouldn't get elected. Well, now it risks being the case with the big data people. And they could say, yeah, you know, well, the implication is Putin got Trump elected, right? Well, it was, he couldn't have done it without Facebook.
Or without Fox News.
Oh, well, that's a different thing though, isn't it? That's an old-fashioned way where people talk to people, not where everybody is under surveillance and then they're slipped a tricky piece of fake news to get them to go one way or the other. You know, that level of targeting and subtlety, you know, that these big guys have access to and it has been used against the democratic process. The politicians have woken up to that, and they will clamp down because it's their futures at risk, it's their neck on the line, and you can guarantee they'll look after their own neck.
Exactly. So lots of things going on, and thank you, Clem, for coming to the show and having this really nice chat. So
you're going to get no traffic on this video now. I've said all these things. They're going to look. They go, no, 0 views for this one. No, de-platform that one.
Well, we don't care. We talk about what is matters.
You get 2 views. Me and your mum.
Okay, let's bet on that. Thank you, Clem, for everything. This is everything from the Financial Fox. I see you next time.